Hello, welcome to this Ned Davis research video, where we will help you see the signals. My name is Brian Sanborn, NDR's Global Head of Investment Solutions. In this episode, we'll be speaking with NDR's Chief Economist, Alejandra Grindal, about global monetary policy. Alejandra, although the Fed has yet to cut rates, other central banks have started easing. Which central banks have started cutting rates, and what does that mean for global equities?
Great. I'd love to talk about it. And thank you, Brian, for having me on again. So one of the central banks was the European Central Bank, also known as the ECB, and the Bank of Canada. They actually cut their target interest rates in June for the first time since the pandemic. And these two developed market central banks joined Sweden's Riksbank, as well as the Swiss National Bank, and a handful of emerging market central banks in commencing rate cuts. As a result, our central bank measure, which shows the proportion of the world's central banks in easing cycles, climbed to 41%. And this is actually the highest since March 2022. And we have found that when more than half of the world's central banks are in easing cycles, it's actually been a bullish condition for global equities. So it's not surprising that equities do well after first rate cuts. And given that central bank rate cycles tend to be coordinated globally, this broad-based accommodation usually serves the market quite well.
How have first rate cuts impacted individual markets on both an absolute as well as a relative basis?
Yeah, that's a great question. So first, turning to Europe, the MSCI Europe ex-UK, that equity index has been up an average 26% a year after first rate cuts by the European Central Bank. And in our analysis, we used Germany's Bundesbank prior to 1999, just so that we could have more history. But of the 9 instances that the ECB and Bundesbank have had first rate cuts, and so we have this data since 1970, and only one, which was in 2001, have equities actually been down a year later. So pretty good track record. The ECB rate cuts in 1982, 1985, and 1999 are kind of similar corollaries to today, because those were instances where we saw the equity market actually do quite well into the first rate cut. But even in those cases, equities still tended to do very well even after the ECB had its first rate cut. Turning to Canadian equities, they too, like the European Central Bank, have seen equities up a year after first rate cuts. However, that gain hasn't been nearly as large. So one reason is just due to less history. So we had a weak 2001 case, a weak 2007 case, and that was actually weak everywhere. But because there's so few cases in the Bank of Canada, it just sort of brings down the average. And then it's also worth noting that the Bank of Canada engaged in a little mini rate cut cycle in 2015, and that saw equities down a year later too. And some of you may recall that the Fed increased rates actually that year. So that was one of the years where the Fed went in the opposite direction from other developed market central banks. And that ended up being negative for the broader market. But what's interesting is, despite the positive absolute performance following these first rate cuts, on a relative strength basis, equity performance in these two regions has actually been kind of mixed after first rate cuts. So you can't really draw any strong conclusions. So in Europe, for example, equities on average have outperformed the rest of the all country world index in the 6 months after a first rate cut. But in Canada, its equities on average have actually been flat versus the rest of the all country world index, so global equities, in the year following a first rate cut.
And what has historically happened to both yields as well as the respective currencies around the first central bank rate cuts?
Yeah, so we want to round out the rest of the asset classes, right? So if you look at 10-year yields, they actually usually fall after both Bank of Canada and ECB rate cuts, so not highly unusual. But what's interesting is the decline in yields actually begins well before the first rate cut. So as you can see in this chart, the 10-year Bund, so this is the German government bond, has fallen an average of 39 basis points actually from the year before the first ECB rate reduction. And then it falls another 56 basis points in the year after the first rate cut. And only one instance, which happened to be after that 1999 cut, was the yield significantly higher a year later. So overall, pretty good track record. If you look at Canada, its 10-year government bond yields tend to also fall before first rate cuts, but they actually fall even more. So tends to be down an average of 80 basis points the year before. And then once you hit that first rate reduction, yields have just fallen an average of 6 basis points a year later and has only been down 5 of the past 7 instances. Moving over to currencies, again, very mixed performance. If you look at the euro, can kind of go either way after ECB rate cuts. The trade-weighted euro has fallen about 0.85% a year after the first rate cut, so slightly down, but it's only down half the time. So again, a mixed bag. If you look at the euro versus the dollar, it's also showed historically mixed performance after first rate cuts. Moving to the Canadian dollar, if you look at the trade-weighted Canadian dollar, it has declined after first rate cuts by the Bank of Canada, actually down an average of 2.5% a year later. But again, individual instances are very mixed, with the Canadian dollar actually up a little more than half the time. So you just have a few instances that are bringing down that average into negative territory. And what's actually kind of interesting is the occurrences where the Canadian dollar weakened after first rate cuts were either around times when the global economy or the US economy fell into recession. So that broader global economic cycle was driving a lot of those underlying currency moves as opposed to the rate cut itself.
Alejandra, thank you for your insights. NDR clients can read Alejandra's research notes in her weekly Global Economic Focus publication. The indicators Alejandra and the research team developed for our subscription service are also used in our model portfolios, which are available for direct delivery on TAMPs as well as through ETFs. For more information on NDR, we encourage you to visit ndr.com. Also, for those in listen-only mode, video versions, including the chart pack of See the Signals, are available by going to info.ndr.com/ndr-signals. Thank you for joining us as we help you to see the signals. So long.